In this portion, we shall be discussing the financial relations between union and states. Finances are very important for smooth functioning of any government. In fact, finances are sine qua non of any government. If we see the federal feature, if we see the structure of government in India, as we have said, we have got federal form of governance where subjects are divided between various layers of government, the union government, the state government. If these layers are to work properly, efficiently, they would need finances, they would need funds which are coextensive with their responsibilities. But then, it is not possible to have an ideal situation where we can provide the exact resources in comparison with the expenditure responsibilities of the states. And accordingly, the financial relationship in India we find is very complex. Part 12 of the Constitution deals with the financial relationship between union and states, or what we call as fiscal federalism. If we see provisions in Part 12 of the Constitution, we find that there are various taxes which states can levy under entries 45 to 63 of state list, various taxes which can be levied by the union. So far as the taxes levied by the states are concerned, the exclusive control over those taxes is with the states. But so far as the union resources are concerned, there are diverse and complicated provisions pertaining to that. If we analyze Article 268, that talks about those taxes which are levied by the government, levied by the union, but then they are collected and appropriated by the states. In this category, up to Constitution of 101st Amendment Act, there were two taxes. One was stamp duties and second was excise duties on medicinal and toilet preparations. These are levied by the union, but then they are assigned to the states. The levy by the union is for the purpose of administrative efficiency, for the purpose of uniformity. But then they do not form part of the Consolidated Fund of India and they are assigned in totality to the states. Constitution 101st Amendment Act has taken away the second tax from this category, that is, excise duties on medicinal and toilet preparations now do not fall under Article 268. Then is Article 269, which has a unique constitutional history. If we see Article 269, this provision has been amended 4 times. Article 269 talks about those taxes which are levied by the union, collected by the union, but assigned to the states. Originally, as this article was enacted, it contained 6 items which were levied and collected by the union, but they were assigned to the states. But with the passage of time, as I said, 4 constitutional amendments have been made to Article 269, starting with Constitutional 6th Amendment Act, 46th Amendment Act of 1982, 80th Amendment Act of 2000, and Constitution 101st Amendment Act of 2016. Constitution 6th Amendment Act added one more item, that is the 7th item to this list under Article 269, that is taxes on sale or purchase of goods when that takes place in the course of interstate trade or commerce. 46th Constitutional Amendment Act added taxes on consignments when that consignment of goods takes place in the course of interstate trade or commerce. 80th Constitutional Amendment Act removed all items from Article 269 except these two which were inserted by 6th and 46th Amendment Act. Because when Article 270 was amended, then these items were taken away from the purview of Article 269. So basically these taxes, like central sales tax, that was enacted under Article 269, that was levied by the union, collected by the union, but its proceeds were assigned to the states in totality and they do not form part of the Consolidated Fund of India. But with the enactment of Article 269A and the introduction of GST and Integrated Goods and Services Tax, Article 269 is going to become redundant very soon. Now, next provision is Article 270. These are the taxes which are levied by the union, collected by the union, but these are shared with the states. A portion of these taxes, on the recommendation of the National Finance Commission, which is appointed under Article 280, is shared with the states. As I said, it was not possible to devise exact resources which match the expenditures of the states, and therefore the Constitution provided a flexible mechanism that some institution will find out how much is the mismatch. They were well aware that the resources of the union are greater than the resources of the states. They were also aware that the expenses of the states are higher than the expenditures of the union, and therefore some amount is required to be given to the states from the union kitty. Accordingly, they included Article 270, which provides that the union taxes are to be shared with the states. Initially, only income tax was required to be compulsorily shared, but with the passage of time, as I said, 80th Constitutional Amendment Act of 2000 made all union taxes shareable with the states on the recommendations of the Finance Commission, except Article 268, that is stamp duties, except 269, and except those surcharges which are levied under 271, which are meant exclusively for the union. Now, moving on to Article 271, this is one tax which is levied by the union, collected by the union, and is reserved exclusively for the union. This includes surcharges on all union taxes. But Constitution 101st Amendment Act of 2016 has taken out the GST from the purview. That means union government cannot levy GST for the exclusive purpose of the union by virtue of 101st Amendment Act. Then we move on to another important provision, that is Article 246A. These are the taxes which are levied by the union and states concurrently. From the enactment of Constitution 101st Amendment Act and its implementation, we have the concurrent powers of taxation. Up to this act, we did not have any concurrent powers of taxation. Taxation powers were divided between union and states. This act for the first time has provided for the concurrent taxation powers. And if we look at Article 246A, that starts with notwithstanding anything contained in Articles 246 and 254. Therefore, what they have done is that the traditional division contained in Article 246, read with Schedule 7, this article says notwithstanding anything contained in Article 246 and 254. And accordingly, this says the union can also levy the tax on the GST, goods and service tax, on the same tax base, and the state government can also levy GST on the same tax base. The difference is that under Article 246A clause 1, states can levy GST on intra-state transactions, whereas union can levy GST on interstate transactions as well as intra-state transactions. Moving ahead, Article 269A, read with Article 246A2, gives the exclusive power to the union to levy GST on interstate transaction, and union has enacted a law for that purpose, which is Integrated Goods and Service Tax Act of 2017. Now, this law empowers the union government to levy taxes on interstate transactions. We all know the territorial jurisdiction of the state is limited to transactions within the state, or what we call as intrastate transactions, whereas the union can levy taxes on interstate and intrastate. Therefore, now the union can levy GST both on interstate as well as intrastate on the same tax base concurrently with the states. However, whatever GST is levied by the union, that is shareable with the states on the recommendations of the Finance Commission. So, unions share in IGST as well as unions share in GST is shareable with the states. Moving ahead, if we look at Article 269A, we find that this provision has been enacted in the Constitution to provide seamless flow of input tax credit, because we wanted to have one nation, one tax. And accordingly, we wanted that the transaction made in one state, the tax paid on that can be utilized towards offsetting the tax liability of a transaction made in another state. So, to ensure seamless flow of goods and tax on goods and services, Article 269A has been enacted in the Constitution. This apart, if we have a look at the constitutional provisions pertaining to the taxes which are levied by the union and states, we find that majority of taxes are levied by the union, or not, even if we cannot say majority, maximum the taxes which are elastic, taxes which generate more revenue, they are with the union, and taxes which generate lesser revenue comparatively, they are with the states. That is why the Constitution founding fathers provided for these provisions in the Constitution, where the union taxes can be shared, or union taxes, the assignments, the proceeds thereof can be transferred to the states. In this video, we have discussed the taxing powers and the financial relations between the union and states. In the next video, we will be discussing the grants and aid and the institutional mechanism regarding financial relations between union and states.